Welcome back, everybody, to Altcoin Daily. My name is Aaron. The reason why you subscribe to this channel is because on a daily basis, we break down everything going on in the cryptocurrency space. We make the whole market easy to understand. We show you things that you would not normally know about unless you subscribe to this channel. And in this video specifically, what I want to do is go over some of the top projects in this space, tell you how you rank depending on how much of the respective coin that you hold, show you, how you rank, how much of this cryptocurrency you need to have significant wealth. And this is what we're doing today on this channel. Now, we're not going to get to every single cryptocurrency. So if there's a coin that you want us to cover in the future, comment that coin below. I'll be looking in the comments, and I'll make another video in the future with the top coins in the comments. Now, before we go over this, before I show you this, it has come to my attention that many people in the cryptocurrency space are confused, and many people are unable not only to evaluate these projects, but more than that, many people, especially new people, don't even understand the basics, don't even understand how Bitcoin is different than Ethereum, which is different to Chainlink, which is different to Cardano, which is different to Dogecoin. Most people just see the coin, see the ticker, see the pretty colors, and buy it because they think it's all the same thing. My friends, if you don't understand what you're buying, you're not going to do very well in this space. So before we get to the individual projects, let's talk about how people are confused in this space. And Michael Saylor is going to articulate how there are basically 4 different types of cryptocurrencies and how he thinks about them and how most people should think about them. Watch this, and then we'll get into Chainlink, Ethereum, Cardano, and more.
Let me give you a model, a 4-quadrant magic quadrant model. I think that I'll start with the observation, cryptocurrencies mostly aren't currencies at all. Cryptocurrency is a misnomer, and it creates massive confusion. And I think people in the space are confused. I think people out of the space are confused. And I think a lot of people that speculate in it, they speculate just in these things without having a long-term thesis about what they're doing. Here's the way I would segment the space. 4 quadrants. You have digital property. Bitcoin is the king of digital property. It's optimized for integrity and durability over long periods of time. The idea is I want to take $1 million, buy Bitcoin, and I want to hold it 100 years, maybe 1,000 years. Imagine owning a city block in London. Your family owns it 300 years ago. When would you ever sell it? Never. Do you want to sell it? No. How are you going to live? You're going to generate yield on it through rent by lending it out to someone else to build a building on, or you're going to finance it and you're going to borrow against it. How long can you do that? You can do that forever if you're actually a smart landlord. It's not a currency. If you owned 10 city blocks in London, and I think like the Duke of Wales owns, parts of London, you probably know the history. A lot of the land doesn't trade hands. If you own 10 city blocks in New York City, your family might keep them for 300 years. If the Fed keeps printing 10% more money a year, you can expect your land will go up by 10% a year because it's scarce, it's desirable. You can continually refinance it. When you have $1 billion of it, it goes up by 10% this year. And then you have 1.1 billion and you borrow 50 million at 3% interest, and you have no capital gains tax. You have no income tax. It's a simple business. That's digital property. Digital currencies are Tether, DAI, Circle. DM will be a digital currency, a CBDC. That's a digital asset that's seeking to be a stable currency, and it's a medium of exchange. If you want a high-speed decentralized medium of exchange where you can move $50 million from Zimbabwe to Emirates on Saturday afternoon, outside of the Fed wire, outside of ACH, outside of the banking system. If you want to give everybody in El Salvador $37 on their mobile phone, you got to do it with a digital currency. So this is not a subtle thing. It's 8 billion people need a currency. The currency is the medium of exchange. The property is the store of value. Now, the third quadrant is a digital platform, Ethereum. It's a platform. They want to create a platform where you can create applications like a decentralized exchange, an insurance company, NFTs. Decentralized applications is their mission, but they are a platform for it. When you buy a ETH, you're buying an asset token, a digital asset that gives you a share in that digital platform. And then the fourth quadrant is digital or decentralized applications, Uniswap, right? They're trying to replace NASDAQ or Coinbase, or Binance Smart Chain wants to replace Binance, a centralized exchange. So here, looking at the picture behind you, Sven, I give your family $1 billion and I say, you can either buy $1 billion of land in London, or you can buy $1 billion worth of buildings in London, or you can buy $1 billion worth of the British pound, or you can buy $1 billion worth of companies in those buildings. Okay. The British pound is the digital currency. The land is the digital property. The buildings are the digital platform. The companies are the digital applications. You understand the upside, the downside, and the risk profiles of each of those four? See, the land will probably be here for 500 years, right?
Absolutely.
Right. The buildings probably got a useful life of 50 years to 100 years max.
Hey, in the background there's some buildings that are around 500, 600, 700 years. Yes, but
maybe some.
Yeah.
And then there'll be like
church, for example.
Yeah. So it might, probably some might last hundreds of years.
Yes.
And then there'll be like the some where they'll take it down because it's no longer competitive. How about the companies? Name a company in London that's been around for 100 years.
Oh, most of them are gone, right? I mean, that's the cycle of life.
So that's the best way to understand the crypto economy, right? The digital currencies have to be compliant and compatible. They have regulatory risk. There's not a lot of upside to owning those, by the way, but you need them as a medium of exchange. If you want to trade in and out of them, you got to have them to lubricate trading and DeFi. And you also need them to buy coffee. In El Salvador, they want the digital dollar to buy stuff with, but they want the digital asset, the Bitcoin, as a long-term store of value. Think savings account, checking account, or think in terms of working capital that I need in the next 12 months versus corporate treasury that I need to hold 100 years.
And by the way, this video is not financial advice. I'm not a financial advisor. This video is just opinion and perspective, information from a person who has been in the space for years and follows the market every day. That being said, let's get into it. Bitcoin is the market mover. I believe that Bitcoin, kind of like how Michael Saylor thinks, I believe Bitcoin has decades of potential ahead of it, since it is specialized to be the most decentralized and permissionless money for the world, digital gold 2.0. So Bitcoin and Satoshi holders, how do you rank? If you own 0.1 Bitcoin, you're a shrimp. If you own 0.25 Bitcoin, you're an oyster. 1 Bitcoin, you're a jellyfish. 1 to 10, you're a piranha. Do we have any dolphins in the audience? Do we have any sharks? I happen to know for a fact that we have both shrimp and whales who watch this channel in Bitcoin and other assets. And before we move forward, let me just point out this. It is kind of common knowledge in the cryptocurrency Bitcoin space that if you own just 0.28 Bitcoin, you're statistically guaranteed to be in the richest 1% of the world in Bitcoin terms. And if you want more information on that, how exactly is that possible? Watch this video that I put out 10 months ago. I go over it within the whole video. So it's no surprise how we continue to see people buy in to Bitcoin, both buy into the asset and buy into the value prop and narrative. Another one, NFL player Saquon Barkley to take 100% of his endorsement money and put it into Bitcoin moving forward. This is the face of a winner. Moving on to Ethereum, there is a reason we're seeing such notable investors like Mark Cuban, like Raoul Pal, talk about how big decentralized finance is going to be in the future. And since decentralized finance is primarily on Ethereum today. They're targeting an Ethereum price of $20,000 per Ethereum. So, how much Ethereum do you need to become a cryptocurrency millionaire? Well, let's be realistic. If Ethereum goes to just half of what the big investors are predicting, 10K, you only need 100 Ethereum. If Ethereum does hit 20K within the next 2 years, like Mark Cuban and Raoul Pal are predicting, you just need 50. If Ethereum goes to 40K, you need 25. And if Ethereum goes to 50K, you only need 20 Ethereum to be a millionaire. And by the way, I know 50K probably seems like a big number, and surely it is. I don't think we're going to get anywhere close this cycle. But think long term, like Michael Saylor was saying. And by the way, Tyler Winklevoss thinks that one Ethereum will hit $75,000 per coin. And if you want more information on that, watch this video that we put out 6 months ago. Finally, on Ethereum, if you look into it, retail is scared right now. There's a lot of fear, uncertainty, and doubt in the market, but this is not scaring away the institutions and the whales. Ethereum's top 10 largest whale addresses now hold their largest supply of Ethereum since May of 2017. Look at this. They're buying, my friends. They're buying. And as long as Ethereum is touted as the next big thing, as long as people see value in Ethereum, Cardano and things like Cardano are going to continue to do well. Cardano demand rises among retail and institutional investors. Well, Cardano holders, how do you rank? If you have 100 Cardano, you're a shrimp. If you have 1,000 Cardano, you're a starfish. If you have 50,000, you're a piranha. Now, I'm nowhere near. I own Cardano, but I'm nowhere near these higher numbers. I happen to know we have some Cardano octopi, shark, and whale in our audience. So let me know your thoughts on Cardano in the comments below. Moving forward, let's talk about Chainlink. Why is it that CitiGroup is saying that Chainlink may gain prominence over Bitcoin? Why are they so bullish on Chainlink? First of all, I think they should watch this Michael Saylor interview. But beyond that, what is Chainlink? And then we'll get into how do you rank. So if you're unfamiliar, Chainlink is a cryptocurrency aiming to incentivize a global network of computers to provide reliable, real-world data to smart contracts. Smart contracts are in all of DeFi, all of what's happening on Ethereum. Smart contracts, basically anything, any kind of program running on top of blockchains. Now, the problem is most smart contracts need to rely on some kind of external data source, which is primarily centralized, to properly execute their terms. That's a problem. Chainlink has addressed the Oracle problem. Chainlink was created to address this issue by incentivizing data providers called oracles to act as a bridge between blockchain smart contracts and external data sources. For every oracle within the Chainlink network, it is incentivized to provide accurate data since a reputation score is assigned to each. Further, when nodes do follow the software's rules and provide useful data, they are rewarded in Chainlink cryptocurrency Link. This stops people from just spamming the network since Link holds a value. And that being said, Chainlink is on a major dip right now, my friends. Will it rise past all-time highs? You know, we'll see in the future, but I happen to know we do have some people bullish on Chainlink. So how do you rank? One Chainlink. Does anybody just hold one? You shrimp. 100, you're a crab. 1,000, you're getting into dolphin octopus territory. And 10,000, you are a Chainlink whale. Now, like I said, we're not going to be able to get to every single cryptocurrency in today's video. So comment. We'll make another video in the future. We'll make maybe Elrond, or, let me know what you think we should talk about. But, these projects that we went over today, keep in mind, just because a cryptocurrency asset is in the top 20 today does not mean it's a good investment. Dogecoin down 36% over the last month. And, there are better projects than others. Like I said, you need to understand the differences between property and platforms and dApps. Sol, this is a another platform. Their ecosystem is growing, but this video is getting kind of long. We will continue this conversation in a video later this week. Let me know what you think of this in the comments below. And that being said, I'll see you tomorrow, my friends.